What am I looking at today? I love ratios. So when I took a look at, got this idea from Occupy Wisdom on Twitter's. I saw that chart, the ratio of gold to the Dow, and it tells you when stocks are cheap, when stocks are expensive. And I just kind of, I like ratios. Sometimes you look just at gold, what's its correlation with the market. Sometimes it has one, sometimes it doesn't. But when you divide, when you have correlation, a ratio between two commodities, and then sometimes you get something a little bit more meaningful. Sometimes it's a combination of those two instruments that have more meaningful impact or insight into the market, what's happening. Can I add this to my weight of evidence? So right here I have the monthly chart. I have oil divided by gold. So the higher it is, oil is outperforming gold. Doesn't mean gold is going down. It just means that oil is going up higher. Same thing here, gold, oil in 2000, here in that peak 2005, even 2007, oil was really outperforming gold right there. Oil crashed, and combining that with gold that's not crashing as much or increasing, and then you have that ratio going like that. Highlighted the recessions, 2015-16, that micro recession. And each time, or close to when recession started, I'm going to highlight that right here, the ratio oil started to underperform gold, or whatever ratio we had, that strong correlation. When it starts flipping over, there's like a flip-flop in between the two, and then when there's no more correlation and you go in negative territory, we are in a recession. Right here, flipping through, short while after, recession defined. Combine that with the monthly defined tops on the SPX or the Dow Jones. Here's another one right here. Recession started right there, and it was the inverse at this stage. The gold was, where's my ratio? Oh, okay, that's the correlation. When that started, when that correlation with the Dow Jones started to change or doesn't have anymore, market's going to decide what to do next. We had a recession happening. So not a lot of, I'm still exploring this. There's not a lot of data yet. I need more points. Here's another one. When that ratio started to not following the Dow Jones, going negative territory, we had been declared in a recession. That micro recession 2015-16. So maybe this one has less weight. So where are we today? If previously there were crosses about to happen or crosses that did happen and we were close to recessions, so how far are we now? So it's already starting maybe to go down. Maybe it wants to start having that ratio of oil versus gold starting to have less and less correlation with the stock market, and going into unknown territory, no correlation, and maybe negative. So how many months before we go in that scenario where we had a flip-flop previously? Is that going to match up with the maturing of the non-farm payrolls until they start being negative? Will that start to coincide with unemployment rate starting to go back up, and all these other economic data we had? It's just part of the weight of evidence. If it would have been really crossed, I could have said, oh, something's about to happen, or I'll be more. But right now, we're really not there yet. And remember, the recessions happen after or really close. Oh, we start flip-flopping. Really not a lot of big data set. So that is kind of shaky for now. I do know that ratio of oil starting to underperform gold for the past 10 years. Gold has been an outperformer of oil, and inversely before, look at that, the mountain. higher highs for oil. Oil becoming the superstar versus gold. Its peak in 2005 and tried again in 2008. But finally, oil imploded. Combine that with either gold staying flat or going up, and that you see that ratio changes more and more. Where here, this is gold at the forefront of showcasing its power versus the oil. So we're approaching all-time lows in that ratio. Very, very interesting. So gold really taking a handle on the oil. We're gonna go test it again. Oil right now has been catching up to gold. Is it gonna stop at 12-month moving average and go back down? And then we're gonna keep doing our lower highs to go test that that bottom line right here. If I put a 1 in front of that, just for my eyes not to be influenced too much psychologically, can this be a multi-year, multi-ever crazy bottom formation, and then we could explode to the top side? Is that even possible? What am I saying, Pat? We're not quite there yet. So what would that mean? If the ratio would be to go really in favor of gold, so gold's gonna have to start really outperforming right here, and that would be my measured move. What if I do gold divided by oil? We don't, not quite the same chart. So right here at these moments, we had gold, March 2016, gold really outperforming oil. Sorry, but that was probably the peak of gold or the bottom of oil, and after that, the vapors has started being changing. So if you're pro gold, this is probably the extremes, and you want it to start off here where oil is really outperforming gold, and then you want to bounce off. Where did these lines come from? You want to bounce off these lines right here. So if you're pro gold, you want to show some strength versus oil, and you want to bounce off here, and you want to go challenge those previous highs. And here you're starting to define some monthly defined resistance right there. So that pattern, that chart doesn't quite look, and I think it's normal as oil divided by gold, but the symptoms are pretty much the same. Oil now underperforming, overperforming gold, lowering that ratio, and maybe a bounce off here, and then we could get that formation to explode and then go back into pro gold mode right there, guys. All right. All right, ratios, not super duper easy to understand. I think I'm gonna have to deep dive some more. Gold maybe with silver, oil with silver, with different metals, and that's how you learn. You keep digging, and through the charts, you don't follow anybody telling you. You get to discover what the underlying themes are of what's driving the markets or what's helping the market move, and not what you listen on TV, but what you figure out by observing, guys. All right. Thanks for watching. Ciao.